Hello, and welcome to a short discussion on the topic of foreign exchange liquidity. Managing liquidity in a fragmented, distributed market like foreign exchange is challenging. So with me today here to discuss how we in NatWest Markets are tackling these problems, I have Marc Hinken, Head of EFX Trading in EMEA, and James Hibbert, who is our EFX quant trading team. So, firstly to Marc, when we use the word liquidity in the context of FX spot, what exactly do we mean?
Liquidity is the ability to transact in the FX market and the cost associated with doing that transaction. We would typically say that there are three key components to liquidity. The first is the market spread, so the difference between bid and offer in the market, where a wide spread is typically bad for liquidity. The second is volatility, so how much the market moves, and where higher volatility is typically worse liquidity. And the third is executed volume and transactions, where lower transactions and lower volumes are typically also bad for liquidity.
So, which of these three is dominant, if there is one, which is most important?
Considering your spread is typically a reflection of liquidity, I would say that market spread were the most important if I were to choose one.
Okay. And how has liquidity evolved in the FX market in your view, in your experience over the last couple of years? We obviously had a lot of volatility at the start of COVID in 2020, and again, sterling specifically, September 22. How has that unfolded from your perspective?
The pandemic is what I would say was a liquidity event, a huge market shock with some really quite volatile and extreme market moves across a range of asset classes. And we saw a big increase in volatility, which is bad for liquidity. We saw market spreads widen significantly, which is also bad for liquidity. Executed volumes also increased a lot, but the effect of the first two outweighed the final one, and it was some of the worst liquidity I've seen in my career. Looking at the sterling move in September 2022, sterling moved lower quite significantly following the political turmoil in a very volatile fashion, so again, bad for liquidity. Market spreads widened out a lot, which again, bad for liquidity. There was an increase in market volumes and client volumes, but again, the first two outweighed the final one, and liquidity was also very poor in sterling specifically during that time.
And when you look across the market, do you find that market participants' expectations of liquidity and what they can do is aligned with the reality?
Market fragmentation and an increase in the number of new participants in the market has meant that the spot market has become a lot more competitive in recent years. And with that increased competition has led to spread compression in order to win client volume. Consequently, the liquidity picture for clients has often appeared a lot better, but for liquidity providers hasn't necessarily been the case. And so with an increased sophistication by internalizing a lot more flow, as an example, then liquidity providers continue to try to win volume and also do it profitably.
Okay, thank you, Marc. Turning to James now, from a technical perspective, interacting with the fragmented market, which is a common theme that comes up, clearly requires some detailed analysis. What are you able to do in terms of analysing the liquidity problem?
As Marc mentioned, we look at primarily volatility, spread and volume. And we want to ensure that we look at those three inputs to liquidity from the entire perspective of the entire market, not just internally. Volatility is the easiest to measure, and it's fairly consistent across venues and pairs. And the next is market spread, which is similarly fairly consistent across venues. And the last is, in terms of ease of being able to measure, is volume, which is much more difficult to measure because we don't get to see the volume numbers for every venue.
Yes. Okay. And the quality of data, how does that vary by source and pair?
Generally speaking, the more liquid a pair is, the easier it is from an analysis point of view, simply because of the amount of data and the quality of the data. Eurodollar, for example, is widely traded across many venues, and there is a lot of data. Something like an EM pair like Turkey might have fewer venues or less data, and then there's even more sparse pairs, for example, frontier pairs, where the data is really quite poor.
But where you have data, are you able to pin down well the intraday variations in liquidity?
Absolutely. The liquidity across the day does vary a lot. For example, during the London session, we expect most pairs to be at their most liquid, and overnight the liquidity can be much worse. Generally speaking, it will increase towards the London session and then decrease overnight gradually. But we do expect the London session to be far more liquid than overnight in most pairs.
And how can clients use this?
We want to be able to show clients the liquidity conditions, and generally speaking, when a client transacts during the day at the most liquid time, they get the best result. And it's not only the best result for them, it's also the best result for us. If they transact at a illiquid time, more often than not, they're going to get a worse price.
Yeah, okay, good. And to both of you, really, what are the key takeaways that you want people to take from this discussion?
I think the most important thing from a liquidity point of view is to understand when the liquidity is good and when it's going to be cheapest to transact, and also to pay attention to market data, because market data can have a significant effect on liquidity conditions.
And I would add that if you're unsure about the best time of day to trade, or want some help observing the data calendar to decide which points are relevant for a particular transaction, then yes, either one of the trading team or the sales team are very happy to help and discuss on a case-by-case basis.
Yeah, great. Well, thank you both very much. And thank you for watching. If you do have any further questions on this topic or any others, please don't hesitate to get in touch with us. Thank you.